My name is Savoy Chocho, and working together with the educational team at the Zambia Institute of Marketing, I'm going to show you how students should have attended to questions in this paper. This was question 3 in the Zambia Institute of Marketing subject, Basic Finance, of December 2020. Question 3, this was: students were required to indicate which account was going to be debited, right over here, and which account was to be credited from this information that's given here, 1 to 10, and that's what I'm going to show you. But before I do that, let's remind ourselves of a principle. The principle is you debit an account that is receiving and you credit an account that is giving. So, to repeat, the principle is you debit the receiver and credit the giver. I want you to think of accounts as being like rooms. There are many rooms, and this can be a room for cash, it can be a room for inventory, it can be a room for debtors, it can be a room for creditors, it can be a room for computers, it can be a room for anything that you're going to transact on and around. And that's the principle. So if you have a room, for example, and that room is for furniture, let's look at number 1. Number 1 here says that this particular account, this particular business transaction involved purchase. That's why it says bought office furniture for cash. This particular business bought furniture. So there's a room for furniture and there's a room for cash. That room for furniture is going to receive furniture because the business has bought furniture, and therefore the account here that we need to debit is the furniture account, like that. And the account we have to credit is the cash account. Why? Because naenda mu account muli cash, mu room muli cash. I remove cash and I go and buy furniture, then I get furniture. So mu furniture account, there's furniture. Mu cash account, nachosamo, there's less cash, and so the cash account is credited. Let's look at 2. Introduced capital by check, meaning the business is already running, but we bring in more money into this particular business. This money has come in what format? It says that introduce capital by check. You only deal with checks when you are dealing with a bank. So as a business, more money has been put into that particular business. This money has been received where? Through the bank. That's why it's check. And so you debit bank. Who do you credit? Capital. That is the name given to money that is used to start and run a business. Capital. Okay. Number 3, sold van for cash. Tenzena motoka, we give it out. We sell the car. We sell it for cash. What do we receive? Cash. Cash account is debited and van credited. Number 4, a debtor, J Banda, pays us by check. Vabanda banandarama zatu. Then the time comes and Vabanda pays us. We receive from Vabanda. What do we receive? We receive a check. So what do? Do we debit check? No, you don't say check, you debit bank, because checks are dealt with at the bank. But who is it that gave us this money? It is J Banda. So we debit, we credit J Banda. Number 5, repaid part of loan from Simwava. Simwava had given us some money. Do you say he lent us or borrowed us? Okay, fine. We got money from him and we are paying him back part of this particular money. So who do we debit? Who is receiving? The one who is receiving is C Mwava. And who is giving? Let's see, repaid part of loan from Simwaba. Repaid part of loan from Simwaba. So Simwaba is receiving, and Simwaba, who is giving here? Who is giving? Who is giving? Who is giving? Okay, who is giving? Okay, so this question, it was incomplete, so been by cash, like that. Okay, yeah, this is the way it was supposed to be. I did not copy it correctly, but that is included now. So we know that what is going out, what is it that is that the business, the account, the room, muchosamo chani, muchosamo cash. Oops, muchosamo cash. So you credit cash. Number 6, goods sold on credit to W Vusiku. Vusiku. How would you pronounce it? Okay, so what's really happening here? We've sold Pankongole. We've sold to who? We've sold to Vusiku. And here we are going to put sales. This is the way it is. Meaning, manje kuna muntu wa Nkongole who is going to owe us. And what is it? We have given them our goods in exchange. So, we are going to debit Vusiku, who is now a debtor, and we are going to credit sales. Please remember that as a principle, sales is always credited. Sales is always credited. Number 7. Bought goods for cash. Bought goods for cash. When the question says bought goods, then we're talking about purchases. Yes, spelling out purchases. Purchases. We're buying. But if a question says bought computer, then you need to clearly specify that you are referring to computer. But when it just says bought goods for cash, or just says bought goods, then it's purchases. Purchases. That's what I wrote at first. Purchases. It's purchases. Using what? We bought using what? Cash. Cash was going out. Teach us a cash. So we credited. Number 8, we returned goods to Elubasi. Elubasi, we went to buy things from Balubasi. So it so happened that some of the things that we bought may not have been in the... let's put it this way. Some of the things that we bought may not have... I need to repeat this. Some of the things we bought from Wolubasi, or some of the things he delivered to us, did not meet the criteria or the standards that we wanted. For example, we may have wanted tiles that are blue, Wolubasi but pasama tiles are yellow. So we are returning. When we return, Tim Bwezela, who is receiving? Elubasi is receiving. He's getting back his stuff. Elubasi. And who is giving? In this particular case, when you return goods, it say what you write is returns outward. Out, it's going out. So return outwards. Number 9, received commission by check. So it could be that maybe we have Zona, or we have Airtel money, or we have MTN money. So for every transaction, we get a commission. Now, at the end of the month, or whatever period it is, they give us a commission. And this commission they give us, we are receiving a commission, and we are receiving it by check. So we have received the commission by check. And as I already explained, when you're talking about check, you're talking about bank. And here, what is going to be? Commission, like that. Okay. Number 10, paid rent by cash. We get cash and pay for rent. We are receiving accommodation. We are receiving shelter, so to say. And so rent is our benefit. And what did we use to pay for this rent? Cash. And that's it. That's all students had to do to get 10 marks. Let me show you how to proceed to part B, which is this one, part B. A bank overdraft is a current liability. I hope that is clear. An overdraft is a facility where a business is going to get more money that it actually has in its account. So you are owing the bank, Ninkongole. So it's a current liability. Number 6. I just dealt with number 6, right? As being current liability, yes. Number 7, we owe a supplier for inventory. We owe. We've been taught you owe. When you owe someone money, Ninkongole, as long as you're owing, it's a current liability. Okay, in this particular case, okay? Because sometimes you could be owing like money for over a longer period of time. That would be different then. But in this particular case, we owe a supplier for inventory. And inventory is an issue that needs to be dealt with generally within 12 months. Number 8, cash in hand. Cash in hand. Ninandarama mumanja. Not in the bank, because you can have money in the bank. But in this particular case, this cash is in hand. It means that this is a current asset. If this is number 8, then this should be number 9. Loan from Devi Mwemba, payable in 2. Let me read this again. Loan from Devi Mwemba, payable in 2 years' time. So what's happening here? We went to get money from him? Yes, we went to get money from him. And the amount of money that's given, we're not told. And they don't have to tell us. But what they have told us is that we pay him back in 2 years' time. Now remember, as long as you are paying back or dealing with a liability over a period of 12 months, it means that that is a non-current liability. So we were even told, when we were given a hint, 2 years' time. Number 10, machinery. What is machinery? Machinery is a is a non-current asset. Voila. And that is it. You see what would have happened? You would have gotten 20 marks. You need 50 marks to pass the exam. If you followed the previous video, I showed you how a student needed to come up with a statement of profit or loss. And further, the student needed to come up with a statement of financial position. 20 marks over there, 20 marks over here. You are already at 40 marks with 2 questions. You need 50 marks. I will show you how you can get 50 marks and pass this exam. For now, what I've shown you here is what a student needed to do. Which accounts needed to be debited, which accounts needed to be credited. Think of an account as a room where you put or remove. Assets, you need to know and understand assets, whether they are going to be current or non-current. Equally, liabilities, whether they're going to be current or non-current. And this is where I end the lesson. Goodbye.